Good day traders, this is Stefanos on behalf of tixee, and in today's video we'll be giving a look back of the markets for the week of the 24th until the 28th of January. Now before we get started, please note that all of the ideas discussed in this webinar are my own opinions and they do not make up for any form of investment or trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products, or instruments, and whether you use any kind of trading strategies. Any information that relates to past performance is not indicative of future results. Now, for all of you tuning in for the very first time, with regards to stocks, we currently have the Q4 of last year's earnings season in full swing. It's something that we discussed in the past couple of lookback videos, which is obviously a series that we hold here with tixee on a weekly basis. The Q4 earnings season is basically the period where major corporations come in and announce the results of the most recent financial reports. As we mentioned in last week's Outlook, for this week, we had Microsoft, Tesla, and Apple reporting their figures on Tuesday, Wednesday, and Thursday, respectively. Of course, these are not the only companies that reported the numbers during the past week, but there were some of the key ones which we were focusing on during last week's Outlook, as we mentioned earlier on. So, kicking things off, we're going to be looking at Microsoft. I'll just pull up the chart real quick on tixee's WebTrader, so you can also have a look at the chart while we'll go over some of the key facts from the report. So as per CNBC, the company beat both the expected earnings and revenue figures in comparison to the forecast figures. Now, while the stock's price fell during the extended trading on Tuesday, it did manage to bounce back and turn to green after the company gave out a sales forecast that exceeded the estimates. So we can also clearly see this on the charts. If I will switch to the daily time frame, again we had the report coming in on Tuesday, which was the 25th. So if we look here on the 25th, although the prices on the day before they were trading lower, we can see this gap up here on Tuesday with regards to the positive earnings report. Now, to be more specific, Microsoft's revenue increased by 20% from last year. And looking some of their key products, sales of Windows licenses, they increased by 25%, while Xbox consoles revenue rose by 4%. Let's also not forget the fact that the recent announcement that Microsoft made, where they acquired a gaming industry giant, specifically Activision, for $68.7 billion, which also it makes up the largest deal in Microsoft's 46-year history. This is also something that we mentioned in the past couple of lookbacks and outlooks when we were basically preparing for the Microsoft earnings report. Now, the global gaming market was valued at $173 billion in 2020, and it is expected to reach a value of as much as $314 billion by 2026. So we're getting some hints as to Microsoft intentions with regards to the overall gaming industry. So again, if we just focus on the chart, we can clearly see that despite the fact that also on the earnings report, Microsoft ended the day in the red. Again, we can see that we did gap up from the previous day. So you can see this overall upwards movement, and also looking at on Friday today, we can see that despite the fact that we gapped down lower, we're closing firmly higher on the day itself. So yeah, this is as much as Microsoft. Now, the other company that we had mentioned was Tesla. Now, Tesla is always an interesting stock. I'll just pull up the chart here as well. Just like Microsoft, Tesla beat its earnings and revenues expectations during its report on Wednesday. However, its share price, it fell by as much as 5% in extended trading. So we're talking about after hours, after the company cited the concerns when it comes to supply chain issues, and which could carry on throughout the period of 2022. Now, its CEO, Elon Musk, also mentioned that he expects Tesla to remain chip limited quote unquote, for the year. Something that was also touted by the fact that they do not plan to release any car models this year. Not only that, hopes that Tesla would release a more budget version of one of its cars, they were effectively shattered, as the CEO said that they're currently not working on it. If you remember the initial reports, it was during, I believe, a presentation around 2020, where a $25,000 model was mentioned, which is obviously a more budget version when it comes to comparing it with the other models with Tesla. But again, these hopes were shattered as per the CEO's comment. Now, the day that followed the earnings call, so we're talking about Thursday, we saw the company share price drop by almost 12%. So we're looking at this candlestick right here. We can see here it ended almost neutral on the day. And then on the following day, we gapped down pretty strongly and continued the move lower, which again, the drop came in by almost 12%, as we can also see by the chart. However, it's always important to zoom out in order to have a look at the bigger picture. We can see that since August to September 2020, Tesla has been trading in an upwards motion. So this could be considered as a minor pullback with regards to the overall trend. So yeah, just something to always keep in mind, to zoom out of the chart just to be able to gain an idea of the bigger picture. And lastly, we're going to be looking at Apple, which was the other major corporation reporting its figures. I'll just pull up the chart again real quick. So lastly, Apple also followed suit as Tesla and Microsoft, and it also beat both its earnings and revenues expectations on Thursday, also reporting record sales in Q4, as it was also reported by Reuters. Now, its sales benefited by strong iPhone demand in China, which came to the face of constraints caused by supply issues. The company mentioned that it made an all-time record of $123.9 billion in revenue, which is also by as much as 10% from last year's reports. We also had Apple CFO, who also said that he expects to achieve solid year-over-year growth in revenues and even set a record in the quarter ending in March of this year. The company reported its figures in the after hours of Thursday's close, and we saw essentially the impact that this had with the open on Friday morning at 9:30 Eastern time. Its share price, if I zoom in on the chart a little bit, so we can see the earnings report came on this candlestick, this daily candlestick here. Again, it was after hours, so after the market close at 4:30 p.m. Eastern. So with the open today on Friday at 9:30 a.m., we can see we had a pretty strong gap up, which also followed through, and the share price is pretty much ending in the green without any major pullbacks, as we can see, as the price is closing near the highs of the day. So yeah, if we also zoom out a little bit again, just to have a view of the overall picture, you can see an overall upwards trending movement with regards to Apple as well, with this one that could be considered as, you know, a simply minor pullback in the face of the overall trend. So yeah, this is as far as stocks. As we mentioned earlier on in the beginning, there's still a lot more companies reporting their numbers in the coming weeks. Therefore, this is definitely an asset class to be on the lookout for. And specifically next week, we'll have yet again some big names on the board. Specifically, we will have Google, Meta Platforms, which is also formerly known as Facebook, and Amazon reporting their figures on Tuesday, Wednesday, and Thursday respectively, all of which can also be found in the list of instruments here at tixee. Now we'll move into Forex, which was also quite an eventful week as well. In the last week's outlook, we mentioned a couple of events that could be quite significant for some of the majors. We had the FOMC meeting on Wednesday with regards to US interest rates, which was then followed by the press conference where Powell gave his outlook with regards to the US economy. Now, while the interest rates remained unchanged at 0.25%, which was also in line with the expectation, the chairman sounded confident as far as an increase coming around in March obviously speaking about the interest rates, and that the further rate increases could be faster and larger. He mentioned that there was some wiggle room as far as increasing rates without necessarily hurting the job market, although concrete decisions have yet to be made. So in the meantime, I'll also pull up the chart of the euro dollar just to see basically how the market reacted to the news. As far as that, we saw the euro dollar falling by 0.6% on Wednesday. So again, if I just zoom in a little bit on the chart, so we'll see again the report came in on Wednesday, which was the 26th. So we can see how this impacted the market. We had a pretty strong gap. I wouldn't say really gap down because you don't really have the close in the Forex market, but we just had this overall down movement with regards to the euro dollar. Again, falling by as much as 0.6% on the day, or 65 pips. And if we look at the pound dollar, I'll just pull it up on the chart. We also had a similar movement. It wasn't as strong as the euro dollar, but we can also see the overall drop with the pound dollar as well. Now the pound dollar, if you compare it to the euro dollar, it fell by 0.35% or 45 pips on the day. If I switch back to the euro dollar though, there's something else that I want to point out, is that on the week we can see the overall let me just switch on the weekly time frame. Yeah, so there we have it. So on the week we can also see how strong the drop was with regards to the euro dollar. It fell as much as 1.8% against the dollar, which was almost further exacerbated by the geopolitical tensions between Russia and Ukraine. And not only that, we also mentioned in last week's Outlook that for this we would also have Germany reporting their GDP data, which is obviously pretty important as one of the Eurozone's largest economies. Now the GDP figure came in at minus 0.7%, whereas the expectation was a drop of minus 0.3%. So yeah, we can see how this affected overall the euro, as we also had the rate comments from the chairman Jerome Powell with regards to the further increases, which gave some strength to the dollar. If we compare it to the pound dollar on the week, we will be able to see again that the pound dollar also dropped as well. Again, not as much as the euro dollar, but it did fall by as much as 1.1% or 115 pips. Now, as far as the technicals, since we're also looking at the chart, if I just pull up the indicators, so I'm just going to put an exponential moving average here, and the RSI. Again, you can adjust this according to your liking, the parameters I mean. So I would set this to a 21 exponential. And the RSI, I just tend to keep it at the default level, which is the 14 one. So it's up to you how you want to adjust those parameters. So you can see that the pound dollar is trading firmly below the 21 period exponential moving average, and the RSI sitting below the 50 level, now trading around the 43 area. And if I switch to the Euro USD, we'll see more or less a similar picture. With the euro dollar, just waiting for it to load. So you can see it's also trading firmly below the 21 EMA, and the RSI trading at around the 31 mark. So yeah, this is with regards to Forex. So we're gonna move on to gold. As one would expect, since we had the strong surge in the dollar throughout the week, gold fell overall. So I'll just pull up the chart for reference as well. So we'll be able to see that gold fell overall on the week here as well. Now, of course, it's not a perfect inverse correlation. However, the general idea is that when the dollar rises, we can expect gold to potentially drop. Reason being is that as the US dollar rises, gold becomes more expensive to acquire, hence the drop. On top of the fact that gold, it doesn't really return any interest, so it may be more attractive for investors to hold interest-bearing assets on top of that. Now, if we look at numbers, its price fell by almost 2.5%, trading below, as we can see, it's trading below the 1800 mark. It's now sitting around 1788, and we can clearly see that it's also trading now, it's crossed below the 21 period EMA, and also the RSI crossed below the 50 mark, now trading around 48 or 47, depending at the time that you're going to be looking at the chart. We did, of course, have some further news with regards to the geopolitical tensions between Russia and Ukraine, but that did little to boost the prices of gold higher, given how strong the dollar was throughout the week. And now lastly, we will look at oil as well. And oil, it basically looks to close a 6th consecutive week. As we can see by the chart, we had week number 1, 2, 3, 4, 5, 6 now in the green, with the price nearing the $90 mark, now trading around 88. Now, while the oil inventories, they did come out negative on Wednesday, they didn't do as much as to drive the prices lower in the week. Some key fundamentals driving oil's prices higher is a tight supply, obviously the ongoing conflict between Russia and Ukraine, which also does not seem to be de-escalating for the time being, and lastly the fact that as countries slowly start reopening some of their borders, we can see airline travel picking up, which effectively leads to more jet fuel demand as well. As we said, the prices now are trading around the $90 mark. We did reach it, but we can see we came back off the highs, now trading slightly lower. But the good thing is that we are trading above the 21 period EMA, firmly higher above the 21 period EMA, and the RSI is also trading at the 67 level mark. Now, depending on the parameters that you said, it may be seen as overbought on your chart, but again, this will differ from trader to trader. And yep, there you have it with regards to the look back and review of this week. I hope you enjoyed the video and found it useful, and I'll catch you all in the next one. Until then, trade safe.